news flow that we have already seen. And back on Friday, it was the cabinet that has approved the insurance amendment bill, raising the FDI cap to 100%. So the big question is, what does it mean for the industry and the players? Will it lead to more consolidation? And which players are expected to benefit the most out of it? Let's try to decode all of that first onto the show. And let me welcome Mr. Vishwanath Mahendra, who is the Executive Director and CFO of Niva Bupa Health Insurance, joining us onto the show. Hi, Mr. Mahendra. Very good morning and great to be speaking with you. So great news for the insurance space. FDI 100% is what the cap stands at. Help us understand, how do you see this impacting the industry overall? Is it going to intensify the competition in the health insurance space? Will it lead to more consolidation, or will it lead to more entry of the global giants in India?
Hi, good morning, and thank you for inviting me. So how it will impact is, I feel that certainly consumer is the winner. So there may be more players, and both sides, new players may enter into this space, as well as the existing MNCs players. They may get benefit because now there is optionality for foreign joint venture partner to increase the stake beyond 74%. So how this will help is, more capital will lead to high innovation as far as products and services are concerned. This will lead to more technology transfer, capability transfer from foreign players, and ultimately more penetration, and that should lead to better products and proposition for the customer.
Hi, Mr. Mahendra. This is Kanishka also joining in. Like you said, it's definitely a win for the consumer. But I wanted to understand, how are the domestic players going to defend their market share? What is the industry's expectation? What are the kind of chats you're having within the industry on the back of this 100% FDI that has been allowed?
Yeah, so one, we need to understand this space a bit more. So currently also 74% is allowed, which is certainly, I mean, non-negligible. So 74% moving to 100%, it may increase competition intensity, but that will not be of the order of magnitude that it will disrupt something in the industry. So that ways, I feel it is beneficial for the consumer as well as for industry participants.
All right, but help us understand what can happen to the pricing power. Will this lead to any more competition with respect to the pricing power? What's your sense? Because overall, if we see the penetration as well in India, that stands at a very low number. So definitely there's a scope in terms of the market opportunity to grow, but with more competition kicking in, what's your sense that how the pricing could be in the next couple of years especially?
Yeah, so actually two factors may be at play. So one, like you mentioned, new players may come in, that may increase competitive intensity a bit. Second, the current players may also increase the scale, and high scale means more economies of scale, leading to better products at affordable price. And if we just see this in conjunction with the exemption of GST, so all these factors should lead to better product and more affordable price in the medium to long term.
Okay. Mr. Mahendra, at Niva Bupa, on the back of this new norm that has come in, are you looking to introduce new products?
See, it's been our practice that every year we come up with new products. So it is not only with respect to FDI, otherwise also every year we introduce some innovative product. And this financial year we introduce product Reassure 3.0, which has been received very well by consumer.
Mr. Mahendra, it was the GST-led benefit that everybody was penciling on, that the insurance industry as a whole will be benefited out of it. It's been a couple of months since the implementation. If you can give us some sense that, are you seeing any material impact of that on ground?
Very positive impact we have seen on both the number of customers as well as ticket size or premium per policy of customers. If I can give you very broad sense on like-to-like basis, in the first half of this financial year, which is April to September, we saw in retail the growth is was 28%, which is pretty good. But in last 2 months, which is October and November, the growth rate on retail health is upward of 40% on like-to-like basis. So that's the kind of traction we have seen. So very positive trend.
A positive trend over there. But Mr. Mahendra, what about, since we're talking about the industry, just wanted to understand, could this 100% FDI move also trigger some kind of consolidation? It could be fewer, but bigger insurance companies that will control the market share. Of course, that's still sort of the trend, but could this, solidify even further? Could we see more consolidation?
So my view is every industry has a cycle. So in insurance industry in general and health insurance in particular is still at nascent stage. So there is a big runway to grow for everybody. So I feel maybe after a decade or two, when growth rate moderates, when penetration is really high, which is very low currently, at that point in time, we can see some consolidation. But this 100% FDI may not automatically lead to consolidation is our view.
Just getting back to growth numbers that you just shared with us, what sort of a response that you are already seeing with respect to the retail participation? So that's very strong. 40% growth is what you told us. But what about the underwriting? Are you seeing any improvement, month-on-month improvement trends over there? Because I do remember that during your last quarterly earnings as well, there was an improvement in that number that was driven by expense leverage as well as controlled retail loss ratio. But how is the trend shaping up in this aspect?
No, that positive trend is continuing, and one growth rate, and I'm talking about retail in this 40% growth rate on like-to-like basis. And in terms of expenses, whenever you have growth in top line and expenses overheads increase, let's say by single digit, so you get economies of scale and operating leverage. So that's something which is continuing and should show positive trend in time to come. And second on loss ratio also, we have seen loss ratio has been benign in this financial year. Infection has been in line with our expectations, so have not seen any outage there.
Thank you, Mr. Mahendra, for joining us today and for your time today and weighing in on what this 100%
If you like this video, then like, share and subscribe to ET Now.